This is Scott Becker with the Becker Private Equity Podcast and the Becker Business Minute Podcast. This is a business update, 11 stories we are following today. First, Bitcoin, in a rise from the dead, has risen 70% year to date. See Reuters, Bitcoin climbs to 9-month high. 2, the NASDAQ is now up 12% year to date. The S&P is up 2.42%, and the Dow is down nearly 4%. Third, futures point down this AM, but this is constantly moving, and we'll see how this plays out throughout the day. Fourth, Credit Suisse is being brought out by UBS, United Bank of Switzerland. We really have to worry when the largest banks end up in financial trouble and when nations are too overextended to help. So what's happening right now, the smaller regional banks, the mid-sized regional banks end up selling to bigger banks. The bigger banks sort of bail them out. We're in the big trouble is when some of those huge banks are also poorly managed and the government has to bail them out. And at some point, the government's only has so much debt capacity. So we'll see how this goes. Fifth, oil has dropped back to $66 a barrel, sort of on potential news of worldwide sort of recession or slowing down of the world. Sixth, the 10-year Treasury yield has fallen to 3.39%. 1 year's at 4.21% or so. Seventh, when people blame Powell for bank problems, they are very misguided. No Fed chair has ever done a better job of telegraphing to investors and bankers his plans to raise rates. This should have given intelligent bankers a great deal of guidance in managing the duration of their treasuries. I'm an individual investor with nothing but the internet, and I knew to keep my durations short. How do these bankers not know that? It's literally amazing. Have they ever seen interest rates rise before? It's something that's lost on me that these bankers have been caught so long on durations of bonds. Eighth, First Republic, story we've talked about a little bit earlier, alluded to. Despite getting some backup last week from some larger banks, a $30 billion infusion keeps sliding. It's down 80% over the last 10 days. It fell 32% Friday and is down another 18% pre-market. Ninth, Kevin O'Leary says from Shark Tank, and he's no angel himself, that Silicon Valley Bank crisis a result of idiot management. We couldn't agree more. 10th, Wall Street Journal reports that some of the large public pension funds are pulling back on their investments in PE. One manager says, we think you can get to the same place with public markets and not deal with the cost, fees, and headaches and lack of liquidity that comes with PE. So one note on sort of the balloon being a little bit off the rose on PE and venture capital. Finally, Mohammed El-Iran, one of the brilliant investors of our time who ran PIMCO for a while, he urges the Fed to stick with the 25 basis point raise that they were planning. Again, the Fed meets the 21st and 22nd, this Tuesday and Wednesday, and we'll see how that goes. So that's what he says. They should stick with it, and we'll see if they do. So he says the Fed shouldn't blink. Thank you for listening to the Becker Business Minute and the Becker Private Equity Business Podcast. Thank you very, very much.